Hello, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you a 2-minute drill on lessons on valuation utilizing FedEx Corporation. The orange line on this fast graph that you're viewing represents the intrinsic value of the company based on a widely accepted formula for valuing a business. So in simple terms, if the stock price is touching this orange line, it would be trading at intrinsic value, and in FedEx's case, a 15 PE. Now, what you can see is FedEx has grown earnings by 11.34% per annum, and that's the growth from this point where earnings were 44 cents up to this forecast point where earnings are expected to be over $26 in fiscal year ending May 27. Now, earnings drive market price is what this whole concept is all about. As Warren Buffett so aptly put it, price is what you pay, value is what you get. So if I put weekly prices on the graph, you can see that the prices do closely track the orange line or the operating earnings growth with a lot of volatility in between. And when the price is well above the orange line, those are poor times to be investing in the stock. When the price is below the orange line, those would be excellent times to be investing in the stock. And when the price is touching the orange line, that would be at fair value or intrinsic value. So here I'm going to pick a spot that is very close, a PE of 15.19, and I'm going to go out here to the fair value estimate for this fiscal year, which ends in May of this year. And I'm going to click here and calculate performance. And what you can see is that FedEx would generate 10.64% over this time frame. That's very close to the 11.34% earnings growth. The point is, when you buy at value, you fully participate in the growth of the company. If you overpay or buy a stock when it's trading at a very high valuation, then you tend to participate in a lower rate than the company's earnings growth. And of course, if you get a chance to underpay for the stock, you get a chance to earn far in excess of what the company's earnings growth rate would have been, as you can see by these pop-ups here. Now, a full fast graph also includes dividends plotted by this white line. The area below this white line is the amount of these profits, the green shaded area that the company pays out. But we also show dividends plotted on top of the orange line, indicating that the dividends are paid out to you. So currently, FedEx is a stock that is trading below the orange line. And by going to our forecasting calculator, we can see that future estimates are for earnings growth to be in excess of 15%. That creates an intrinsic value line of 15.47. And if FedEx was to grow at this rate and trade at that PE, you could make 26.64% average. Always run your numbers out to the logical conclusion. And finally, do your own research and due diligence. This is a high-level 2-minute drill look at FedEx Corporation.